Narrative is the understanding of what the algorithm will do next, why it will do so, and when it will do it. Those are 3 questions that if you were to do a poll publicly, even if you asked people that call themselves market makers. So narrative is the understanding of what the algorithm is going to do in price next, why it should do it, and when will it do it. I walked you through it today, like I've done many times, but I want to go into greater detail here and close this one and bid you all a good weekend. When we had this consolidation in here, I drew your attention to the fair value gap here. I told you that the initial fair value gap on Monday, that was one of interest for me, and I told you I'd drag that out, much like a Sunday opening price. Just like I teach on an intraday daily basis, the opening price at midnight. You can utilize that for power 3 concepts. You're buying below it when you're bullish, selling short above it when you're bearish. It's a really nice filter. It doesn't mean you can't take shorts or longs that would not be in agreement with that idea. It just means that that's the best of the best. And if you're really trying to be disciplined and you're willing to let a lot of trades go by, but you just really want the best ones, and you want to have like the record that I'm showing you publicly because everybody's asking for a track record. My track record is what you see. I'm accurate. When I call it, it works. When I whistle for it, it comes. That's the track record. I'm bringing it publicly. You don't need me to push a button. You already know how to do that part of it. What you don't know is what I'm showing you here live. That's mentoring. Showing you what's going to happen in price before it happens, and then it does it. It encourages you. It shows you that the concepts are indeed valid, and it improves authorship. So let's go into those 3 questions here with this morning and kind of like solidify this as a lecture that you can be thankful that you were part of. The initial opening range I mentioned here, that was providing us initial resistance on the idea that we would see ES get in sync with what the NASDAQ was doing. So go back and think about what I was suggesting about the dollar. I wanted to see it go weak, go lower, but it could. Here's one of those if-then statements in logic. If the dollar goes lower, ES can go higher easily. However, if that doesn't occur, then we find that the dollar consolidates, which is what I said in the recording. Go back and listen to it. It can consolidate. Well, the dollar's been consolidating. Don't believe me? Let's take a look at it. Yes, we went up here, but it's inside that range high and that range low. So we're doing what? We're just going sideways. So a consolidating dollar is not equivalent to a lower dollar where we would expect higher prices in ES, but we would not want to go long in ES if this was raging higher and traded outside of its dealing range high. That's not what we want to see, but we haven't seen that yet, so it's all consolidation. Now, let's ring in indicators. Okay, there's a couple companies out there, a couple individuals out there making indicators for TradingView and other platforms. And don't get me wrong, I love the publicity because it's getting people knowing more about me, and they can find the channel and they can learn how to trade for free and not have to worry about paying anybody to do it or pay a ripoff that's been taking my content and rebranding it. The indicators would plot these little areas here as fair value gaps. That's not what it is. This is not a fair value gap that you could utilize for that purpose. If you go back in the recording, you can hear me right down here. I said, I don't want to see it turn here. Because not that it can't go up here and treat that as a sell side imbalance, buy side inefficiency, or a premium fair value gap to go short and expect lower prices. It's already done 3 stages. A low that went below this one over here. This low went below that one. Now this low was here. Go back and listen to the recording. During this time, I'm saying I don't want to see it turn here. So if it starts to turn here, it's going to do what? It's going to trade back up into these areas here where anybody just watching one ICT video or learning from somebody else with a dollar mentorship, rebranding my stuff, they're going to say, oh, this is a short. This is a bearish order block. It's not, because the narrative is stating that the dollar has already done 3 stages of runs on sell side. It's not technically a 3 drives pattern, but from a narrative stance, it's already taken 3 pools of liquidity for sell side. So what is it likely to do next? Consolidate or run for buy side? Where is it going to consolidate if it's going to consolidate? Here and here. What has it done? Consolidated. If it runs higher, where's the buy side? Right above here. Okay, so that is hard to teach in a tweet. It's hard to talk about in hindsight for you to see, oh, that makes sense, because it's going to seem like it's form-fitted and cherry-picked. But I gave you all that insight. Go back and listen to this again. Right down here, I said, I don't want to see it turn, but it can consolidate. Consolidation in a dollar is much like what I teach when I'm teaching Forex. A dollar index can be consolidated, and when it is consolidating rather, what that does in Forex, it allows the cross pairs, the non-dollar based currency pairs, to move, versus like when dollars moving freely higher or lower, that's directional for euro dollar, pound dollar, Aussie dollar. But if the dollar is held in consolidation, like we're seeing here, what happens is you'll end up seeing like euro pound will be permitted to trade wider than it normally would. You'll see a difference between cable and euro. If you look at the difference between them two now, cable is a little bit weaker on the downside, and euro dollar didn't go. Well, just show it. I'm going to teach it, right? So let's show it. So here's a euro dollar on a 5-minute chart. I know some of you are here just for ES, but trust me, this is teaching what you need to know. So here's the euro dollar. Okay, it's consolidating with the dollar. Pound dollar, much more animated. Even though it's sloppy and sideways, a lot more animation to the downside. What do you think is going to happen when we load up the euro pound currency pair? What direction would it be? And would it be stagnant price action? Would it be consolidating like we've seen euro and dollar? Or would it have a little bit more wider range or displacement? Oh, look at that. So euro dollar was consolidating while dollar was consolidating, and cable was decidedly lower, more animation to the downside, giving way to a firmer euro pound. So the trend is going to exist or materialize in this pair, because it's not rooted or founded on a dollar. So the allowance for the algorithm moves and shifts to this pair while they're holding dollar. Euro is heavily weighted with dollar, so it takes a lot for it to not be consolidating with it. But the times that it does break out, that would cause euro pound to drop. But it's consolidating with dollar while cable drops. Cable is pound dollar. So that is the equivalent to saying that this is going to go up as a trend. So you want to find big trending days or big trending model days in crosses that are not dollar based. I just taught you this. This is taught in the core content. Okay, this is ICT 101. Okay, and this stuff is gold. These are the receipts. This is the proof. This is the evidence. So go back inside this range. What range? This high to that low. Why am I picking that high? It's an up close candle. Why am I not picking that one? That's an up close candle because this candle's high is higher than that one. It's also having a candle that's lower in its high to the left of it. So this makes this what? A swing high. So that high down to this bullish breaker, that passed through one time, that is your dealing range. Okay, this is your dealing range. This is the part that people pay me for this information, okay? So if you're going to sleep, stir yourself up, because this is what people want to see. So there's your dealing range right there. Right inside that little, let's lighten that up a little too Too bold. Okay, so there's your dealing range. Inside that dealing range, I don't care how much time it spends inside of it. I don't care. I'm waiting. I'm waiting for something to occur. What was that? Everything I outlined this morning. Does it support price going higher at the breaker? Yes. It goes back down one more time. Does it go outside that range? No. So the dealing range is not disrupted. It only went down there one more time. But inside that range, with all these candles, I am not worrying about this. Okay, I'm not impatient. You heard me. I'm waiting for what? I'm waiting for the movement above that fair value gap inside of this dealing range. And it's in the premium side of that range. It's in the upper portion of it, upper half of it. My expectation was we were going to reach for higher prices this morning. I outlined it. It's all in here. 4138.75 was my specific target because it would take us above this high here. That's where buy side is. So where specifically am I aiming for? Because I'm not doing a supply and demand zone. I'm telling you specific price levels. I'm going to submit to time while it's doing all this chopping around until it does what I want to see it do, right back to that fair value gap. Once it trades above that and takes out these highs, go back and watch the recording because that's when I transition down to a 1 minute chart. At that time, all through here, I'm going to extend it a little bit further because this is where our range is. And then we crossed over the fair value gap. So I'm encapsulating in this little orange box this up close candle that took us above these highs and above that fair value gap. So dropping down to a 1 minute chart. And you thought it was just moving averages, right? Oh, like ICT, you can trade with moving average. Yes, you can. I used to do stuff like that. But I didn't know what I was doing. And I didn't know what I know now. And I would never do that again. So here's your dealing range. So inside of this high and inside of this low, I'm not concerned of how many candles it makes going sideways until we get above. When we get above, take out these highs here. What is that technically becoming? A shift in market structure. We've already shown 2 times where it worked off of that bullish breaker, that blue shaded area down here. And I told you that the candles that it needs to now deliver. Otherwise, it's not good. And it would probably go deeper than the bullish breaker. And my analysis would be incorrect. And I would just have to wait for something else to do. So I gave you all the parameters, everything. I told you what would nullify the idea. I told you what we were specifically waiting for, what the criteria was, where the accumulation would take place inside the bullish breaker and inside of the initial fair value gap on Monday. That's this green area. Does it accumulate in here? Yes. Does it send price above that fair value gap that I had on the 5 minute chart when I expected it to do it? Yes. It came in, opened, traded down into it again a little bit, and then rallied. Then created the fair value gap I drew your attention to real time right then and there. I said that if this candle here, I would like to see it trade down and give it an immediate rebalance because this would otherwise be a fair value gap. Right when that forms, what are you waiting for? What time of day are you waiting for in the morning session? Between 10 o'clock and 11. So in between 10 o'clock and 11, we're talking about 60 minutes, folks. 60 minutes. You got a job? I know, it sucks. Be thankful that you have it. You're running a business that's time consuming and distracting? I understand, but be thankful that you have it. You sleep during this time, ICT. I can't wake up. Use an alarm clock. Because you're going to have to make some kind of sacrifice, folks. Somewhere in your life, you're going to have to give up something to the market. It's a cruel lever, and it demands all of your attention. It demands all of your energy. And if you let it take all of it from you, it'll be a vampire and suck everything out of you. Life, time, hope. And you'll fall in love with it more than your family, like it did with me. This removes that. It's very specific, time-based. Silver bullet. You want a one-shot, one-kill silver bullet idea? Give it to me, ICT. Well, here it is. Repeats, 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 repeats. But how does it work? You have to understand the narrative. And that's why I said all those PD arrays that I taught in core content that were being tossed around on Telegram and Discord channels and websites for sale, and they're still trying to sell it when you can get it right for free or on my YouTube channel. Clowns. And I'm out here teaching it to you live in a live stream, just like I was doing with paid mentorship students, walking through, and some of them looking for signals. They would get upset, impatient, say this is not what I wanted to do. You don't want to learn how to trade, is that what you're saying? Because that's exactly what you're saying. You got to learn how to see these things form before they're in the chart. What are these repeating characteristics? Let's walk through it. Time, okay. What is the price going to do algorithmically next? What's the algorithm going to do next? Well, we were walking down here. I said, okay, we went down to that bullish breaker one more time. It should deliver above that fair value gap. I told you that. Within 2 candles, it should start running. So it should go higher and then start reaching for the buy side over here and into that 4138.75 level and in the high of the old new week opening gap. So that's me telling you what I believe that the algorithm is going to do next. So that's in this recording. You'll see it. It's there. It wasn't ambiguous. It wasn't flip-floppy. It wasn't wishy-washy. It was exactly what I said. Why should it do it? That was the other question, because this is narrative. Okay. Well, because we've already went down to the low of that dealing range from that high to that low. We did not break it. And it's approaching what time? 10 o'clock. So you forgot about time. I didn't. I'm aware constantly. I don't have to have these lines on my chart, but you should while you're learning. You should have these reference points highlighted in time on your chart because it'll keep your eyes focused on what it is you're looking for. Now think about it like this. If you're looking at charts like this, okay, inside of this vertical line and this side of this vertical line here, we have one portion of price action that keeps your focus dialed in. You don't care so much about what it did before. You're forced to look at what is it going to do in between these 2 lines. Well, I told you. We're going to draw up. Told you the very candles it's going to key off of. Told you what time it started running. Why should it start running there? Because at 10 o'clock to 11 o'clock, that macro that runs, once there's an imbalance that's formed, I took your attention to it right there. I would rather have seen immediately this run here and then take off. That's what I wanted to see, because that's what I'm looking for in low resistance liquidity run signatures. That I love that pattern. I love it because it tells me it was going to go much higher than it has. But because it didn't, this is the part where you write down what I'm saying, folks. This is good. It's good stuff. Try not to say any bad words. I've been doing good since Passover, by the way. If it would have created an immediate rebalance, in other words, let me take this off. I'll put it back on in a second. If this candle, when we were talking about it live, I said I would like to see it trade down and touch that candle's high. That would be an immediate rebalance. If that occurred, we would be above 4180 because it created the fair value gap. In other words, it closed here and kept that low here and that candle's high here. That started the fair value gap. Then it becomes a simple silver bullet trade. Then you got to revert back to just, okay, where was your targets? And there it is. And be done and be content with that for the morning session. I'll teach you more about immediate rebalance and how the effects of seeing those form and how it supercharges price action runs. Right now, I'm just putting it out there because that way you have a section in your notebook where you have now been introduced to it, even though I talked about it in the lessons. That fair value gap is the fair value gap that forms once we had these highs taken out, once we traded above this fair value gap. That was the minimum threshold that has to trade above to act as what? Inversion fair value gap. So for the indicators that are presenting this, there's a fair value gap right there. There's an order block right there. So if we trade down to that, wow, we got ourselves an ICT indicator. Well, by golly, we got something. Everybody wants that. Nobody wants that. Nobody wants this. Okay, this is flawed logic. It's lacking narrative, and that's why the indicators will not be doing you a favor. I'm sorry, but you want a Lux life, you got to do it the way ICT teaches it. Okay, it doesn't come by an indicator that just plots simple stuff. Simple stuff, okay, doesn't equate to blue ribbon results. And if you're a coder and you're doing this stuff, I'm not trying to be ignorant to you. I'm not trying to be disrespectful. I'm just reminding you that you're doing something and presenting something, albeit interesting. I like seeing how people are trying to automate the things I'm teaching, but it's not correct. It's not. It's not correct. It's not complete. So there's a lot of things that. Why ain't this a fair value gap? Because the narrative was we had to go above that older fair value gap here and trade above, which cancels out the premium idea on a short basis. Because if it can trade through that, what is it doing? It's disregarding. It's disrespecting what would otherwise be a selling area. And how many times did we trade up into that? Multiple times. So it's warning it out. It's telegraphing it to you that this is not an area to go short on. So what are we looking for? A run above here and above that fair value gap. Then rally between 10 o'clock and 11 o'clock. When, for narrative, when does this form? Between 10 o'clock and 11 o'clock. It can't be this as a fair value gap because it's below what we were requiring to be broken to the upside. So we can't look at that as a fair value gap. That's not even a fair value gap. It's a balanced price range. We have a fair value gap here, and we have one here. This is all balanced. So there's no need for it to go back down there. See, that's the part you don't know. And that's why you shouldn't be trying to teach my stuff. Fair value gap, silver bullet. The difference between it, if it would have been an immediate rebalance, there probably wouldn't have been a silver bullet trade for this indice, and then we would have been rocketing higher to 4180. But because we had a fair value gap form traditionally, then it's just retrade down to it perfectly to this candle's high, to the tick, here, here, and off to the races it goes. So narrative is the most important thing, not market structure. Okay, market structure, you hear people, your trading requires, in essence, your understanding of market structure, because market structure is everything you're looking for. No, it's not. It's one facet, one piece, one little cog in the machine. It's useful, don't get me wrong, but narrative is where it's at. Why should it rally here? But Michael, why didn't it go down here for these relative equal lows? Because it doesn't need to. It was going down here to pick up discount pricing. Going down here to pick up discounting price. Goes above a premium array as we would expect. We don't look at this as a selling opportunity because it's already shown us what? It's not likely to do that. We were not falling victim to this as a short either. We didn't look at that as a selling opportunity. I said, we're waiting. What are we waiting for? Everything I outlined this morning. And then, boom, the little unicorn right here. The thing that some people say that doesn't exist. You can't time the market. You can't time the market? You will if you stay hanging around with me, you will. You can't time the market, ICT. Nobody can do that. Oh, my middle name's Nobody. And your name's going to be Nobody soon too. Folks, you can do this. The logic has already been taught to you, and I'm proving it by doing these live streams. I'm not really teaching all that more than if you've been listening to what I've said in the lectures where it's really long and drawn out, because I've already talked about all this stuff before. But we answered the equation of narrative. What is it? It's knowing what the algorithm is going to do next. Why it should do it. There's no need for it to go down here below these relative equal lows when we're going up against bullishness. It's failed to go lower on that fair value gap that we were watching this morning. So inside of all these individual candles, I'm ignoring all these candles until we get into that breaker. Because if we get in that breaker and we go below that low, we've now traded outside of the dealing range of that high and that low. And that is something I have to now measure. Do we view it as a run on stops that rejects and goes back above here, or does it accelerate down? If it accelerated down and then treated this breaker as a inversion level, then I would have to abandon the idea of initial bullishness and wait for more information. That's not reacting to price. It's anticipating what I want to see in price and what I would be engaging with, willing to assume risk on, and the other side of the coin that is not saying, here, I'm right if it does this, and I always got an out to say I'm right. No, I'm showing you what negates what I would rather do, and this is what it would do in price action for me not to take a trade, but this is what would likely unfold if it did. In shorter, plain terms, it's knowing what you want to trade on, but also identifying if that's not going to pan out, what it's likely to do if it's not going to do that, but you're not willing to trade on that. That's not a 50-50, I'm always right. That's something, I favor one side of the marketplace. Whenever I give an opinion, whenever I sit down with my students, whenever I'm doing something live in a marketplace, I always tell you what I think. This is the side of the marketplace I favor. Even in climates and trading days where I would not trade, like against FOMC, against the CPI number. I was lucky yesterday, everything panned out like I said, but that's not to be viewed as skill. It just so happens that it delivered it right then. But most of the times on CPI, I'm not right. So how's that work for you? Okay, I'm being honest and I'm telling you, I know where my limitations are. If I was always right in CPI, I'd be ahead of it all the time.